Alrighty, guys, welcome to Game Global. And again, this time I'm making a bit of an exception. Normally I do dating content, but ultimately I came to the realization that game is more than just personality. You also got to take care of your life. I'm no finance expert, so this is a learning experience for me, and I like things in plain English anyway, so I get some fascinating questions. We are joined by Miguel Dollar Cost Crypto and Charlie Cultivate Crypto. Feel free to introduce yourselves just for a quick minute.
Yeah, sure. Yeah, my name is Miguel, Dollar Cost Crypto. I've been in the crypto space since 2016. Started my YouTube channel in 2020 and co-founded Crypto Mindset along with Charlie. We've, onboarded about 14,000 people into crypto, primarily through the Red Pill and other means and stuff into crypto. We've been running this course for almost 4 years now, and I think this is the 12th or 13th course we've actually done, actually. So we've taught a lot of people in the space.
Yeah, and my name is Charlie from Cultivate Crypto. And yeah, co-founder of the Crypto Mindset course here with Miguel. We've been streaming about crypto on YouTube pretty much every day since 2019. And yeah, just trying to get the good word out there to people that, hey, crypto's not all that scary. And actually, it is one of the best tools for fighting inflation because I think a lot of people are like, hey, crypto's risky. Well, you know what's riskier? Keeping cash over 10 years, in a bank account. So, yeah, so we like to teach people how to get into this industry safely and in a way first that they don't lose money. So that way they can maximize and make money, consistently over the years.
Fascinating. That lines up nicely with my first question, actually. So I was going to say cryptocurrency is seen as an investment or a form of savings, but it can also be used for buying things. What uses of crypto do you personally stay away from? For example, actually, my friend from Montreal, he back in 2017, late 2017, I think, he bought a girl a drink using Bitcoin. And the next day, it was double the price. So just throwing
Bruh.
that example out
Bruh.
here.
That's it. That's
Yeah,
great. No, I'll give you both ends of the spectrum here. Actually, like something that I absolutely enjoy using crypto for, and then anything else, right? So, in terms of one thing that I think is extremely useful for people with crypto is if you travel or if you're international or anything like that, if you don't want to use, the banking system for wiring money, because it could take several business days sometimes, and there's always, a few hiccups with that. Crypto is great because no matter where you are, you can send it over to yourself. So it's just a matter of how do you take it out into the real world? And nowadays there are Bitcoin ATMs pretty much everywhere. And so you can easily send yourself, or take your Bitcoin or your crypto along with you wherever you are, and then cash it out that way if you like. So, and there's other ways as well. But in terms of something I highly don't recommend to people is day trading and leverage trading. So that's a use, or that's more like a tool use of crypto that people try to do to make a quick buck and to try to um, maximize their money in a short time frame. And whenever they do that, right, sometimes they'll win, but most of the times they'll lose because if you're going to go into, you know, the casino side of crypto, I would say it's kind of like a Wall Street tool, right? It's leverage is just taking, basically borrowing on your assets more than you have so that you can compound more, but you can also easily the price moves so volatilely, you can just so easily lose that money that most of the people I've seen do that who are not, Wall Street traders lose a lot of money that way. So we tell people, stay away from that drug.
What about you, Miguel? What do you personally stay away from? Have you ever bought something using Bitcoin, for example?
Yeah, I bought a couple of things here and there and stuff like that. So, some of the original uses for crypto was basically I mean, it was like from like poker transactions all the way to like, Silk Road transactions, which are highly illegal now. Right? People
Not
used to buy
recommended.
weed. People used to buy weed and recreational drugs and stuff like that with crypto, but it's mostly facilitating maybe like a payment for service or something like that. But for the most part, I typically would only use maybe a stable coin, something like a like a Tether or maybe USDC to pay for something if I was going to. But for the most part, I try not to spend crypto because like your friend saw, it goes up really quickly. There are parts in the cycle when you can use it. As an example, when we break a new all-time high on Bitcoin, or especially if we're several times higher than that, then there's a safety parameter there. Then why not spend a little there? Because it's kind of like cashing out, but it's costing you a fraction if you were to do it right now. So the thing is, once you've been in crypto a long time, you kind of know when it's hot and when it's not. And that's kind of like the first thing is with a lot of people is they don't know what they're really doing. So that's why like we teach people about watching for Bitcoin, kind of what's going on with the halving, all these little things, these macro events in the crypto space, to know when to do this as well as when to start cashing out. Because that's the thing where a lot of guys either fumble the beginning or fumble the end, and it's one of the two basically.
Alrighty. Crypto was the buzzword in 2017, and AI has become the new buzzword from 2023. How can AI and crypto be combined? What are you seeing, and what are you hoping for?
Yeah, right now some of the early use cases are very, very simple. So one of the technologies in crypto that is extremely useful is smart contracts. And so those are self-executable contracts based on, programmability, whatever code you put into it. So um, for example, if you were, it's not fully fleshed out. We're kind of like in, Web 1.0 days, back in like the early 90s with dial up and shit. So we don't really have the full capabilities yet, but ideally, what things are going towards is programmable smart contracts through AI. So where you can give, your AI basically your commands, and then that can automatically code the smart contract to do whatever it is that you want to do. One thing that smart contracts have been used for and blockchains have been used for is like deeds to houses, stuff for real estate, stuff like that. That certificates that you need to have like a true source of who actually owns it. And so, for whatever reason, if you need a contract like that to be self-executable, then you can program that through the AI instead of having to, hire a Solidity developer to do that for you. So it just makes things easier for the normal person to interact with crypto in Web 3.0. So that's pretty much how we look at it there. But um, yeah, in terms of actual coins and projects doing stuff like that, there's only one. Well, there's only, I would say, three that we recommend. So there's one called Fetch AI, which in terms of price appreciation on the tokenomics, actually using AI in a uh, proper way in crypto, that one pretty much has the whole shebang right there. And then what's that one called? AGIX, Singularity Net. This one's also okay, not as good of tokenomics, but also actually using AI in a pragmatic way. And then Render Protocol, RNDR. Those three coins are decent AI coins in crypto. Everything else is trying to do too much with the technology. So they're trying to say like, hey, we're gonna, take blockchain and AI and make this, Megatron craziness. And they just basically sell you a dream that's not really realistic for the technology that we have today, but it might be realistic for the technology we have in 20 years or 10 years. But so if you see a crypto project with AI that's too good to be true, most of the time it is. So the technologies are coming together, but slowly but surely.
Alrighty. The cryptocurrency space is littered with all kinds of scams. Even my industry, the dating advice industry, same fucking thing applies. There are so many scammers out there, people giving terrible advice can be very dangerous. So how can you avoid these scams at every cost?
So I mean, this is kind of what we do in the crypto mindset course is we teach people not just we teach people kind of the vernacular, the meme culture. I mean, memes are fucking gigantic in crypto, but we show them kind of the culture, the kind of the glossary of words that that people use, and then we kind of put them through this really intensive, like, I wouldn't want to call it boot camp, but more or less like Hell Week, or I'd say Hell Month, really, where we put them through all these basically live lectures, and we kind of teach them up to the point where they're conversating with somebody like as they were as a crypto person, and then what will happen really quickly is that their bullshit meter can goes off like a very finely edged tool, because as soon as people have taken the course and they've been in crypto for a little bit, they hear someone talk about crypto and they can tell right away they're full of shit, and then in terms of scams, if it's too good to be true, it is like, oh, if let me send me an Ethereum, I'm gonna send you two back. Send me half a Bitcoin, I'll send you in a Bitcoin back. Bullshit, right? It seems like it's common sense, but people fall for it hook, line, and sinker. You can't trust anybody in terms of like, oh, I can't get my wallet to work. Let me go to the helpline. There is no helpline. There is no helpline. That's why we've had to create like private groups where you can safely ask questions. Because if you ask on Reddit or you Reddit, if you ask on Reddit or Twitter or Instagram, you're gonna get bots and people DMing you, hey, I'm from your wallet support line. Yeah, just input your 12 words right here. And for people who don't know, wallets and hardware wallets usually have like 12 like words or keys. And if as long as you keep that safe and never take a picture, like one of the big safety things that you could do to protect yourself is never take a picture of your private keys, never copy it to a clipboard, never write it down on a computer, never. I mean, analog as hell. It's got to be written in the real world on black ink, and eventually in metal, stainless steel metal eventually. But though, if those words never see the light of day, in terms of no one can take a picture of it, it's now it's saved to a clipboard, no password managers, and just all analog. There's almost nothing they can do in terms of hacking you outside of like one day when we have quantum computing. But there's going to be like updates to protect against quantum computers anyway. But um, it's basically, once you've kind of been in the space for a long time, you can hear like just like if you're a car guy and you've been fixing cars forever and you hear some guy saying some crazy shit about like something that doesn't even exist or some upgrade. It's like, dude, that's what are you talking about, dude? That doesn't make sense at all. But this is why people get tricked real easily, is because they don't know about crypto. And then a guy says a couple big words and it's like, this guy is the next messiah. He obviously knows everything he's talking about, and this is why so many people fall for bullshit, basically.
Yeah, and
It's
being
great.
able to. Oh,
There's
sorry, go
like
ahead.
no university for this shit. Uh there's no guide for it. It's like I think of Tinder too. They don't give you instructions to use Tinder, and just to make an online dating comparison, which is completely different.
Right.
It's still internet related though. People
Oh,
still don't know
absolutely.
how to use it, even though the experts are like these things are pretty obvious. But there are just so many guys failing to
Right.
understand how it actually works and how to actually benefit from it.
Okay, and actually, just because you mentioned universities real quick, like most university programs are starting to have like crypto clubs. The crypto clubs are cool. They're okay because that's actually like you talking to your peers and you guys are talking about things, trying to make something. That's one thing. But a lot of the stuff they teach in the university, like a lot of like MIT starting to do kind of courses on this, Harvard are trying to do courses on crypto now, and it's pretty dog shit, honestly. Like
Yeah,
it
it's
all.
very technical.
Yes, it's like this is what a blockchain is. It's like, oh, let me learn about command code and stuff, and but like even them teaching you how to code in Solidity doesn't make you that good of a Solidity and dev anyway. I mean, the best developers in crypto were all self-taught, and they're all taught within the crypto space. So it's like you're better off, because this industry is so brand new that you actually can learn better in the street than you can inside of a university. On top of it, now the piece of paper is eventually will be important. Like I'm not going to say, like, I'm not going to disparage like Harvard and MIT in 10 years, right? 10 years from now, they'll start finally possibly actually making some decent students coming out of there. But the actual important thing is that those people that are going to MIT are high intelligent sort of guys, high IQ guys. And then if they really care about crypto and they really dive into it, that's when they grow from there, not really at the university level. So anyone that's trying to learn how to code crypto, is you're better off just actually trying to look for devs and learning that way.
Yeah, and that's why we've made the course that we do on a quarterly basis because um, there's a lot of people who say in crypto we kind of have a joke. We say we're in it for the tech. even though, it's a technology industry and a financial industry, of course, but we're here to make money, right? And so that's why we started the course, because we've been successful, in crypto. We've had, all the mistakes, we've made them, right? We've lost money here, there, which way, every way. And we take those experiences and we basically want to pass them forward, because we did see a huge gap in that part of our industry. There's a lot of bad information out there, but there's not a lot of good quality information out there. So we wanted to create a place where people could come if they knew a lot about crypto or nothing about crypto, and get started, and really focus on first, increasing the portfolio, making some money, offset the cost of the course and stuff like that. And then from there, that's how I found people actually really engage with crypto. I mean, that's how I came into crypto, is somebody recommended me to get a little bit of Ethereum. I was like, it seems technical, hard, all that stuff. And I was like, okay, well, show me how to buy it. They showed me how to buy it. It was relatively easy on Coinbase. So got some and then forgot about it. But once that first $1,000 turned into $4,000 in about 2 or 3 months after buying it, then I was just like, oh, I get it. This kind of growth in your portfolio is something I'd never seen in anywhere else before, that quick, especially. And so I was like, okay, I got to learn about this. And that's what made me obsessed with learning the technical side, learning the, financial side and everything else. So I really believe if people get those wins in the early days,
Yeah.
then makes it a lot more, you're a lot more motivated basically to jump into the harder subjects later. But if you try to go straight to the MIT, Stanford, super technical, here's how to code type of stuff, then I think most people who go that route pretty much give up, or just don't make that much money in their early days, which is unfortunate, because this industry has some of the best opportunities and chances to do so.
Interesting. I think there might also be a kind of bias because when I was at university, I was writing my book, and my book became a bestseller. And some of my lecturers also had their own books, but mine were way higher up, way higher up on Amazon, for example, in the charts and everything. So it's like I'm more qualified to be a university lecturer in this respect, at
Right.
least. So it's
Yeah.
kind of like, even if you did go to university to learn about Bitcoin or cryptocurrency, the kind of person who would teach it is probably not going to be the kind of person who has made a crazy amount of money using
Right.
cryptocurrency. Maybe they might understand the technology, so there could be the technical bias, but the success that comes behind it. I don't need these fucking lecturers. My book's better than yours. That kind of mindset can take place. I wasn't like that, but I did find that fascinating, at least.
No, no, definitely. And then on top of that too, right? I mean, you're absolutely right. Like, honestly, the schools are really great for technical, like, to understand really what a blockchain is, or a hash graph, or whatever they're trying to teach you in terms of a blockchain. Absolutely wonderful. They will. You absolutely will. But that's not going to make you any money. Zero money. Absolute zero money. Because there's a whole sort of things like like I always explain cryptocurrencies as it's a football team mixed in with the religion with the financial asset. That's
It's
really what
very
it is.
confusing.
Very confusing, and it's basically a bunch of kind of like a financial product slash with a ticker symbol mixed in with like two different types of a religion, I mean, it's like a sports team religion all mixed into one. So there's a lot of human emotion, and there's like it's almost like a social network on top of it. The more users on top of itself, the more you can value it squared effectively, right? So
And
it's like
that's huge right
they're,
there.
yeah, very huge. And then this is what it's never taught really, even in the schools, is that they're like mini Facebooks or mini like apps effectively, right? The more users, the more people are actively using it, talking about it, YouTubing about it, the more the network has value, and the more propensity it has to go up when Bitcoin and the rest of the market starts going up. So another time too is like there is typically, this is just some of the things we teach. There's typically like one out of, so crypto is, as it works like right now, because this could change in the future and we will eventually adapt if it does, but crypto runs in 4-year cycles. And that means like 1 out of the 4 years is really bad. That means prices are only crashing down. Another year is kind of a thawing out year where prices are kind of stagnant. They've very close to the bottom. Great time to be buying, but not exciting. The second year, which is the year we're in right now, means things are starting, it's thawing out. We're starting to, things are getting really exciting. And then the last year is red hot, red hot. And that would be like 2025. So that's why we're so excited right now, because like the prices are still really decent on some of the best assets. There's still a lot of money to be made. And this is what they don't tell you, because because typically when people get onboarded into crypto, it's typically at the all-time highs. I mean, this is the average thing. I mean, even me personally, like I got into I got into crypto at the tail end of 2016. Bitcoin was still at a really good price. We're talking $500 Bitcoin, $5 Ethereum. Bitcoin today is $43,000. Ethereum today is $2,300. So not bad, right? But at the time it pumped from 500 to 20 grand, and from $5 to $1,400, and then crashed to $80. Another one crashed to $3,000. So the thing is like speed kills in this industry. So the faster you can understand it, the more time you can start making money, the more times that gives you some room to actually like get out of your drunken stupor to sell and take some profits and stuff. But that's the whole thing. As long as you understand how the cycle works, you're able to, you know, come out on the other side with a lot more money than you put in, which is really important. That's what we came here for.
Hmm. So this applies to pretty much or generally all the assets, not just Bitcoin.
Correct. Yeah,
And
it's
is
all
that
true.
partially because Bitcoin represents such a huge chunk of where people allocate their assets? It's their dollars, basically.
Overall, yeah, usually Bitcoin somewhere between 40 to 50% of the market cap of crypto, roughly,
Mhm.
as it stands right now. And then that's probably not going to change anytime soon, because the industry is getting very legitimized right now. We're having the big Bitcoin spot ETFs that have just passed in January 10th. So we're having a lot of money, big institutional money, as well as like retirement money starting to buy up Bitcoin now, which is great. You know, everyone except Vanguard, but BlackRock, you know, everyone else is buying. I think we just had Charles Schwab the other day as well start their own Bitcoin ETF. So now if you have a 401k, I'd actually would recommend people buy that through your 401k up to a point. Like I think you have to, because you have to first, because what they'll do is they'll take Bitcoin, because Bitcoin's 40 plus $1,000. So they're not going to sell a share for $47,000. They're going to sell it for $4, $3, $2. So the one thing that I'd recommend some of these guys look at is kind of where Bitcoin is right now in price. And that's how you equate the purchase price and stuff to the current price of Bitcoin. But I think right now you're totally okay. You're able to dollar cost average, I think, safely into Bitcoin for 6 months, and then 6 months to a year later is possibly when you're going to start taking a little bit of money off the table off of that and stuff. The investors that come in later on in 2025 are the ones that are going to be basically in some decent gains and then catastrophic losses, basically, from buying up and stuff. But this is just a normal cycle. This is how it works, because our industry is like, if you want big up, you get big down. Very volatile, but this is how we're able to make so much money in such a short period of time, 2 years.
Hmm. Interesting. So is it fair to say kind of all the alternative coins to Bitcoin, they're kind of gravitated toward the same pattern? I have seen the charts. Some of them like line up just about. Some of them are slightly different, but I do see some kind of pattern there. I'm not an expert though, but
No, no,
is
you're
it because
absolutely
it
right.
has a huge gravitational pull in all the other currencies?
Yeah, exactly. It's kind of like if you look at it in universal terms, right? It's kind of like Bitcoin is your, your main sun, right? The center of the solar system. And we're starting to get kind of like a binary star system a little bit, meaning that Ethereum now, like Ethereum was born of Bitcoin, but it's become so solidified and useful in the space that it's like we have these two stars kind of rotating around each other, Bitcoin creating the cycles, which then causes trust to come back into the market. So, like Miguel was saying, we get to this point to where the market's nuked. Everybody thinks basically that we, what do you call it, are never coming back, and crypto's dead. Whenever that happens, Bitcoin's the first one to kind of pick up the wreckage. start coming back from that, and then Ethereum starts following. And since all the altcoins, or the majority of the altcoins, like 80% of them, have been built on Ethereum, a lot of those coins then follow Ethereum. But now Ethereum has changed part of its fundamentals. It was going from being mined like Bitcoin to being staked, which means in order to validate the network or to validate transactions on the network, it's not done through mining on a computer anymore. It's done from putting up collateral and then using some hash power on your computer in order to confirm transactions. So it's just a different way of securing the network. And that change has actually shifted the Ethereum cycles a little bit. And so it all rhymes, but it's not exactly the same, like you said.
Correct. Yeah, because in terms of like last cycle, so in 2021, we had the all-time high of Bitcoin in November, and basically the bull market was over by March of 2022 completely. So the last coins that were pumping were like a little bit of like something called GameFi, which is basically like video game coins sort of thing. And once that was over, that's it. I mean, a lot of the coin sets stopped pumping by like January, basically. So you still could have things running for about like off of momentum for about three months, maybe 4 months, but then eventually the momentum stops and then the coins all start going down from there.
I want to go back to where you said about engraving your 12-word combination in metal. That seems
Yeah.
pretty creative. How does one do that? Because my first thought is you could go to, you could go to those stores where they do trophies, they engrave, or they engrave in rings and stuff.
Right.
Technically, you're telling someone what to do. My first solution that came to my mind when you were saying that is something I would do is if I'm getting trophies, for example, just for no reason, just I won an award in 1967. They're fucking existent. But just for example, I could have 12 trophies and have one word engraved somewhere on each. And then know the order each one goes by the year each trophy comes or the date, let's say, just to simplify it. Because that'll be 12
Yeah,
years of trophies.
Yeah.
That's like that's how my mind works. I go to like these completely insane, like you gotta solve a fucking mystery to get the prize kind of thing.
well, that's
what
way
are
more
some
secure.
exactly what are some solutions that you have in mind, or even some creative ones, crazy ones like the one I just came up with?
So there's a company called Bill Fodl, Fodl, I believe. And because like yeah, you have if you were to give somebody who is engraving it, if they knew that this was a password, right, they'd be able to take your coins. So doing it in that way, like you mentioned with the trophies, would be relatively secure because the engraver would have most likely have no idea that that was what they were doing. But this company, what they've done instead is they send you it's like a metal sleeve and then a bunch of letters from the alphabet, enough letters, like individual letters on steel plates from the alphabet, so that mostly any combination of letters would be able to be put in there. So you just slide each letter into there to basically get the seed
Ah,
phrase onto that kind of placard.
fascinating. Now that makes sense. That's crazy. Damn.
Yep. And then it's fire resistant, water resistant, so if you keep it, let's say, somewhere safe in your house where nobody knows about it, then, in case of disaster, the paper that you wrote it on is not going to be gone. And then poof, there goes your entire net worth.
Right. I put
Oh
it in
yeah,
the chat. Put it in the
go ahead.
chat for you.
All right. Oh yeah, that makes sense. Because that was leading into another one of my questions actually. Where has my mouse gone? People, yeah, what are some of the flaws of cryptocurrency? Because I have seen some stories of people forgetting their fucking 12-word combination because they
Oh yeah.
got into it years ago, super early, let's say like 2010, early 2010s or somewhere in the 2000s. And then years later, as soon as Bitcoin hit the news and everyone fucking heard about it, including your grandmother, the value for some of those people who had plenty of Bitcoin, um, in some cases, there are guys who had tens of millions in USD value. or even hundreds of millions in USD value as it would stand right now, but forgot they didn't write it down, or they can't remember where they fucking put it. So therefore they can't access it. There was a guy who had, or at the time it was reported a few years ago, it was valued at $180 billion, and he had only free password attempts. So there's also like a limited number of attempts you could try. So it's not like you can find, like, hack your way into it. So what are the flaws of cryptocurrency?
Oh,
Yeah.
A big question, but you could start with like that
it's
similar
human
way.
error. It's human error all the time.
Hmm.
But excluding human error, right? It's like cryptocurrencies give you like we call crypto the red pill of finance, right? Because you finally have ultimate control over your money. The same things that give crypto power, the ability where like it's in my custody, it's my responsibility. I can send it to you anytime I want. I also can lose all my money if I forget the passwords and the keys and stuff like that. So like the reason that a lot of people, I mean, most people have lived their entire lives trusting their entire net worth and everything in other entities. So imagine like you hold stocks in a 401k. Do you really hold those shares? No, not really, right? Do you have your money in your bank? Could you like most people couldn't really withdraw all their money out of their bank without getting questions like, I mean, the other day, like if I were to take out like $5,000 or $10,000, like, what are you doing? Hey, are you paying off a car? Like I literally, this happened to me many times. I'm just trying to get like, I'm just like, I just want to take some cash out or something. It's Vegas, right? And they're asking, so are you gonna pay a car off, or what are you gonna do with this money? And I was like, if I shove it up my fucking ass, that's all. It doesn't fucking matter. It's my, I can do whatever the fuck I want, right? But this is what the bank, and this is at the small level. I mean, at a big level and stuff like that. I mean, there's all kinds of things where people want to take a couple $1 million out, and then they go into the room and stuff. There's like, are you being like ransomed or something? Like they're like it's all these questions. But in crypto, if I want to send you $1 million, I can send you $1 million and it get to you within 10 minutes or 15 seconds, depending on the
No matter
crypto.
where you are in the world.
No matter where you are in the world. If I have your correct address, I send you the money, you got it. The government couldn't stop it if they fucking wanted to. And that's the beautiful thing. But having that ultimate control means there's human error. So you have to be very careful, and things have gotten a lot better. Some of the really early on mistakes, like back in the day, I'm old enough to remember this in crypto, where you really didn't even really have copy and paste. You actually manually had to type out addresses, which is such a horror, such a horror. Nowadays, like the copy and pasting is really prevalent, as well as like there's kind of RFD codes. There's kind of like these little scan codes where you can instantly double check that, but it still brings up the address. So one of the things we tell people is always read the first 5 letters and the last 5 letters, 6 letters. And if they match up, you can send the transaction and you're perfectly fine. But we still tell people, just if it's the first time sending, you always send a smaller amount. Maybe if you're going to send $1,000, you send $10. Oh, it gets there, cool. But cryptos aren't perfect. Like there's a lot. What happens is, as some cryptos are a lot older versus other ones are much newer, and the newer ones they haven't completely figured out scaling, but they can do so many transactions that I can send someone money for a penny. Where other ones like Bitcoin and Ethereum, when they're being heavily used, the fees can get upwards of $40 to up to $1,000 when things get crazy. But you also have to remember that by the time you're paying that much, that crypto has gone up so much that it's still only a fraction of what you. So as an example, right? Like I like using poker chips as an example, right? Like these are $100 poker chips, right? So in 2019 and 2020, I was buying Ethereum for about $100 a piece, right? By the end of 2021, this was about $4,000. This $100 chip turned to $4,000, and then in order for me to sell it on the because there's two types of selling. There's one on exchanges, and there's one on the actual blockchain itself, like through a centralized decentralized exchange. I would pay a transaction fee of $50 to $300, which is a lot, right? But it's a fraction of this one thing that I bought for about $100. And then that's the big difference there. But what happens is people who newly get into the system, they're like, oh, that's very expensive, which it is. Of course, $300, $400, $500 a transaction is ridiculous. But what's
As
happening is
as a
over
Jew, I'm turned off by that.
Yeah.
Well, I know many Jews in crypto, sir. I know they like money.
I'm
That's for
sure you
sure.
would.
Yeah, I know many. But yeah, but what's happened, the good thing is over time, more and more cryptos have started to figure this out, as well as we've increased the bandwidth because we have more Ethereum and Bitcoin like things that's kind of spreading out the transactions across these coins. So it's kind of like relieving pressure, and the newer ones are a lot faster. So that's kind of the beautiful thing. So a lot of people have basically relegated Bitcoin and Ethereum as like savings accounts effectively, and newer cryptocurrencies as being where we speculate in order to get massive more returns, and then we cash out, and then we put the money and economic energy back into Bitcoin and Ethereum. So it's there's kind of like a revolving engine that kind of happens. Like you make money on this coin, you take some profits, it goes back, it floods back into Bitcoin and Ethereum. Bitcoin, Ethereum go up, and then I take that money and put it into new coins or the same coin, and it's kind of like a flywheel effectively, even though I don't like that word.
Mhm. There's a lot of speculation when it comes to the stock market and cryptocurrency. What are the facts and what are the speculations to be aware of?
Yeah, so what I would say to this is, right, all markets involve human emotion and speculation. So that is a huge driving force behind price, no matter what. But there's understanding how do you determine like true value? Like what is something actually worth? And with Bitcoin and Ethereum basically being, ones and zeros on a chain, or on the blockchain. Um, you have to understand, okay, what brings Bitcoin its value? And one of the first things that you have to understand is the Bitcoin halving, which is where supply is reduced on Bitcoin every 4 years. That essentially resets the cycle because it reduces supply, and and by reducing supply, even if everybody who is currently in the system basically just holds and doesn't do anything, then the price will go up. And once the price goes up, then more people want to come in, and boom, 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 you get the price pumping up, right? Of course, you get to part usually once that happens, uh, the 4 year cycle, about a year before the halving or a year and a half before the halving, is where you get the cycle low for the 4 year cycle. And whenever you get that low in price, that's usually a point where it's undervalued. So, one way that you can kind of view how that fundamental works is with on chain data. So there's a website called lookintobitcoin.com. If you go up to the chart section and go to realized price, that's a metric that's used based on um, some fundamentals of Bitcoin, basically, that you can see every time the price goes below that area, it tends to be close to the bottom of a bear market. So there's the negative side there. And then when you go to the highly speculative side, you can use on-chain data to say, hey, wait a minute, we're way too heated, in Bitcoin's price. We're way too far from that realized price, from that actual fair value of what Bitcoin is. And so then once you get too far, too over exuberant, then it's like, okay, time to take some profits and stuff like that. And usually because that's when everybody, all the speculators, all the retail traders, all the Wall Street institutions are coming in at that point. Everybody wants the party to continue. Nobody wants the party to stop. And so that's where you get people coming in, buying the top, and doing stuff like that. So what one book to kind of understand how humans speculate overall that I really recommend is a book called Reminiscences of a Stock Operator. It's a character named Jesse Livermore. It goes back to the about 100 years ago or so, where people were using ticker tape, and going to bucket shops in New York and other cities to basically, speculate on stocks. And human nature never changes. So that's one thing we can always bank on, right? And so when we are looking at what they were doing trading money 100 years ago, 10,000 years ago, they're just doing different methods, different tools, different technologies. But the way that they over speculate and stuff like that is all the same. So we want to look at the fundamentals and understand what true value is. Then at the same time, you want to understand how the humans are interacting with that.
I like that. I want to highlight that part where we say human nature never changes. It never changes in your lifetime, never changes in 10 lifetimes. It takes tens of thousands of years at the very least. So we're not even going to be alive that long. So that's fascinating. Imagine a portfolio like mine. So I have at least 95% of my investments allocated in stocks and startup investments. What would be the appeal for someone who's into stocks, or even in terms of, to think in another way, if you're allocating a certain percentage of what you're earning in terms of your income per month into investments in general, um, should you diversify into stocks and crypto? What would kind of sway people
Right.
toward crypto if they're really into stocks just like I am?
It's faster
So
retirement, basically.
yeah,
Yeah.
yeah,
Yeah. I
yeah,
mean,
way faster.
yeah, like I mean, it's all age dependent, right? It all depends on how much you're trying. So it's kind of a two-pronged question, whether like so you either are a person who's not investing and is starting to invest, that's one thing. So you can go full crypto at that point, and then eventually like the whole thing is where you're at. So if you've already been investing in stocks and stuff, we're not telling you to get out of stocks, and that's because if you're already successful in that, great. But the thing is, a lot of stock returns, especially because most people investing in stocks are in ETFs, which are more or less based on indices, which is like the Nasdaq or the S&P 500, and those historically do have great returns over like a 8-year period, but at most you're making 7-12% annual returns, which is great, but that's barely keeping up with inflation realistically, right? And over it takes, if you're making 12%, it takes over 7 years to double your money. Where in crypto, I mean, the first 2 weeks of this year, I basically three times my money in the first 2 weeks of this year. Last year, tripled my money that time as well. So obviously, like I kind of like I was explaining beforehand, the last year was more of a thawing out. Like we're finally out of the bad year and we're starting to go up. The gains took the whole year. It really, like most of the gains were made in the last 4 months of the last year. This year it's a lot hotter now, and the returns happen very quickly and stuff. So um as a person, if you're in what I would probably, if I were recommending something, if I mean you don't, no one has to listen to this, but like if I were to recommend to someone that's already in stocks, depending on age, I probably would take 20% to 10%, especially 10% if you're a little bit more older, you're trying to get into your like into your 40s and 50s. You have to also risk less as well, because you only have so much time to kind of build yourself back up, you know. But at 10%, if you were to take 10% of your dollar cost averages into crypto, and maybe 10% of the stock portfolio into crypto, or just Bitcoin alone, I mean, Bitcoin could easily still 3x from this point onwards to get above 120, $150,000, and take profits on that, and then use that money to then sprinkle that back into your stock portfolio. And that could speed up. If you were to do this a couple times over the next 12 years, this could unbelievably speed up the time you could retire or just live very comfortably. And that's how you can use it as a tool. But like if I was still a stock, if I was a full-time stock guy and I still had this, I would still use crypto as a way to like an industry. Like, oh, I have 20% of my investments in crypto, and I use that every year. So if you get a little more in depth with it, like you take personal money, put it into individual cryptos, and besides Bitcoin and Ethereum, I mean, your average return right now is still, you could still make 15 to 30 times on your money, whatever you invest, even right now. That's not
Yeah,
out of the realm of possibility. That's very obtainable. With Bitcoin and Ethereum, you're looking at more like maybe between the two and stuff, like you're looking at more like a 5 to 10 times on your money right now. When you get higher on the risk curve, it's a lot higher and stuff like that. That's why we usually recommend, half a portfolio in the safer assets, and then the other half you have to take some swingers and stuff, but it's usually on more mainstream coins and stuff like that. So it's a great way to speed up your retirement, or you're just basically you quitting your job and having fuck you money, basically.
yeah, and there's ways, if you have tax advantage accounts like 401ks or IRAs, there's ways to get exposure to crypto in the traditional market as well. So Miguel mentioned the ETFs that just came out. The other ways that you can get exposure is through Bitcoin mining stocks. There's one called Marathon Digital, MARA, Mara, and that one in particular, it does have as much volatility as Bitcoin a lot of the time. Sometimes these mining stocks have more volatility than Bitcoin actually. I think another one is called Riot. I forget what the ticker symbol is. I don't know if it's Riot or exactly or not, but there's a few of them. There's a handful of those. So you could, do that. You can also do a self-directed IRA. And we have a tax guy in the course, and we have a few different videos where we explain how to do these tax advantage IRAs. So you could make one of these IRAs through basically a corporation in America, and then when you do that, you can actually self custody through that organization with some Bitcoin, Ethereum. You can also have ETFs. You can also have the mining stocks and all these different things together, and then it's in a tax advantage place for you for later in life. And you can do that with $10,000 or $20,000, and then you can have your larger portfolio in the DeFi space. So you can kind of take advantage of both worlds now. And going down over the next 5 to 10 years, we're also going to be getting like tokenized securities, meaning we're going to have like derivatives of stocks from the regular market like Tesla and whatever, but tradable through 24/7 crypto markets or digital asset markets. And that's something that they're currently testing out in Japan. They're currently testing it out in America, and they're trying to figure out, okay, how can we do that without changing too much of the current system that the banks are reliant on.
Money is more than just a value exchange. It's also a mindset. A lot of guys don't attempt to invest into things because of the fear of losing money and even the fear of having no control. What's your advice for these guys?
Yeah, it's just you have to take risk as a man. If I don't, everything's risk. You can get. I mean, now this is a cliche. You walk out your door, you get hit by a bus, right? But I mean, that's actually true. I mean, it is true. Now, very unlikely. You watch both ways of the road, right? But it's the sort of thing you have to start like, oh my God, I'm afraid I'm not going to start a business. Oh my God, you know what? I'm scared there's going to be girls at the gym, so I'm not going to work out. Oh, whatever. You can literally make excuses for everything, but everything is risk. And a lot of times you find out it's not as risky as you actually think. And you have to there's more risk in just leaving your money in the bank and doing nothing. You're risking not retiring. You're risking being a wage cuck. You're risking taking orders from somebody else. You're risking your whole life away. You are giving your life away. You're just going to be a tax cattle to someone else. That's all you're going to be. So if you're not having action and doing things, then you are literally leading towards a life of just like misery and kind of complacency. You have to risk. Now, that does not mean you have to go jump into the most degenerate sort of things possible. We're not taking loans out, betting it all on black. You can never lose because you can just keep taking loans. And you will eventually win, right? No, we're not saying all that now, but we're saying taking a portion of your income. Like I've had tons of I have tons of guys who took 20% of their income, put it into crypto, and made 20 times on that money, and then made 2 years of income in cash. Imagine you're making let's see, for $50,000 a year. They put 10 grand into crypto. They pulled out 100,000 plus out of crypto. And do you know how long it takes? The average American is so terrible at saving money. The average anyone, European, dude, everybody. Let's be real. They always pick on Americans. Like, no, Europeans are just as bad. I mean, let's be honest here, right? The whole world sucks at money. They're
I
almost
think
everybody's
the
a financially illiterate. Almost everyone's financially illiterate. Like that's why Robert Kiyosaki is a good friend of ours and stuff like that. This is why Robert's never going to go out of business. It's because financial education, there is no financial education. They're all uneducated. And this is like a lifelong sort of thing where we have to keep trying to get people on this because they do it on purpose. They don't want to teach you in school. They don't teach it in college really. I mean, like the most you're going to get out of school is they teach you, maybe they might teach you about a 30-year mortgage and how to balance a checkbook. Who the hell is using a checkbook? So it's all outdated bullshit. I mean, obviously the 30-year mortgage is awesome, but besides that, um they're not really like, they're teaching you very outdated things. And this is kind of why like we had their gripe originally with the colleges is whatever they're teaching you is all old stuff anyway. I mean, Charlie was a corporate recruiter. I mean, a lot of the times, people would go to school for, for computer science and then still would have to learn almost an entire, like, I would imagine like kind of a whole amount of other systems and stuff in on the job anyway. Yeah.
Yeah, and when you do come into risk, one of the problems with that as well is, okay, I'm comfortable with risk because yeah, inflation's basically ruining everything here. So okay, I got to take some risk and jump into this, right? Well, when people do that, um, basically they don't put in some of the basic best practices and protection mechanisms. So we have this webinar called How Not to Get Wrecked, basically that we do every quarter, and we tell people, hey, you shouldn't be watching any of the other webinars on how to make money if you haven't protected yourself on not losing your money first. And we actually have a guy from the UK who's a credit risk analyst by profession. He's helped major corporations around the world basically give credit out to their customers and find out, who's creditworthy and all that type of stuff. So his job was essentially risk management on that for the corporations. And we've jumped into crypto with him and showed people, hey, here's a bunch of different strategies you can use to manage your risk. And we give simple best practices, like for example, if you like, what do you call it? It depends on how many X's you're getting on a coin, but just for example, if a coin 5X's within a year or within 6 months or whatever, what would be the prudent thing to do? Would it be, hey, let it ride because it's all going, 100X, or should you take out 20%, right? Take out a fifth, which is your original amount of money, and then the rest is casino chips. You can let the rest ride. And simple strategies like that, which will reduce your risk in the short term and then allow you to stay in the market as well. So it's a little bit of a balancing act. And I think a lot of people, they're not used to the type of volatility that crypto brings. So I think it's really, really important that people learn those tools as well.
And then and the thing too is that when you're properly explained what's going to happen and that this is normal,
Mm.
then people are able to ride out the storm. And then when the prices go up, they're like, oh my God. It's like, I mean, you literally found, El Dorado basically, damn near, once you discover it. And just to go to that point earlier, like, there's an example I've said in the courses that's pretty it's pretty bad, but it's really important, is that like someone could actually, because what happens when they get into crypto and they get into the courses and they get into these groups is that they're finally around a bunch of people who are very positive minded, and it's all about everyone's trying to grow, everyone's trying to work harder, we're trying to work more hours. You're not around a bunch of lazy people who are just like, I'm just twiddling my thumbs here, putting the minimum amount. Like once you get in, you're like, you see the opportunity, you put more in, you find more ways to do more jobs, you'll save more. And you could literally, this is how bad Americans and just the world in general is about saving money. You could literally you'll put the most money you've ever put into any asset ever into crypto. You could lose half of it and still have more money saved at the end of the year than you've ever saved in your whole life. That's how insane it is. And but with normally with the cycle, even if someone gets some losses there, as crypto goes up, they recover losses and they get multiples on that savings. And that's where it really changes people's lives, because not only have they saved more money than they've ever saved in their life, that savings has multiplied many times over. And you give someone, you can get 100,000, doesn't sound like a lot. It is a lot of money, but it doesn't sound a lot to some people trying to, like, I'm trying to have millions, right? But realistically, to have gotten like $100,000 payout when you're making 50 grand, or maybe a $400,000 payout if you're making like 100,000 a year, that's enough money to put down on a house. You don't got to worry about rent anymore, like foods, whatever. I mean, the weight and burden off your life is incredible. I call it floating. There's like the first time that I ever made any money, like I kind of called it, like I felt like I was floating through life. Like I was just bouncing around. Like I just didn't care about anything. I mean, outside of just like you're outside of buying expensive cars and houses and stuff like that. I mean, you don't got to worry about food anymore. You've got money in the bank now. If something, an emergency happens, you can pay. Like the stress off your life is incredible. You can now quit a job if you don't like to, because if you're making $50,000 a year, you can find another $50,000 a year job. So your job no longer has shackles on you anymore. Now you still have to work and you still have to save for retirement and do all these things, but now you have the the power of options. And I know, I mean, you talk about, you talk about relationships and stuff like that. I mean, a big part of it too is like you want to be a man with options. Like if I don't want to be here at this bullshit ass job, I'm fucking leaving. That's it. You have no power over me anymore. And that's what we do is we give people freedom to do whatever they want with that. We don't tell people what to do with their money afterwards. It's like, you choose your decisions, but we like to give our guys the ability to like be masters of their destiny.
When you have that switch to abundance, everything just becomes completely fucking different. There's
Mm.
no longer an addiction to the only thing you have. If you're losing something, you have the ability to gain that again, whatever that may be, just to put it into those terms. Speaking of El Dorado, actually, I have heard some stories of if you heard if you ever heard of the scopolamine scams in Colombia, dating scams. Basically, there are lots of Americans, people from all over the world, basically going to Colombia, and they meet a girl at the bar, some toxic Latina, as usual. I'm married to a Latina, so I can say that. Y-
They're
Trust
all
me.
toxic. They're all toxic, guys.
It's not the first time I have said that today. Anyway, yeah, so they find themselves a toxic Latina, only to find that she's more than just your usual toxic Latina. And basically they're robberies, because men are so easy to trick when you're a woman, putting them in the position that they think they can have sex with you, then anything is possible. So there have been cases that I have heard of where a Colombian woman and her friend, or like a man she's working with, end up like putting the gun to your head or something and taking people's Bitcoin or cryptocurrency. Have you heard anything like that? And how could, although it's a very extreme situation, how can you protect your assets at all costs?
Yeah, it's pretty rare when those things tend to happen, and it's usually again, like Miguel was saying before, kind of human error. You've done some things, pretty poorly, right? And so, just as an example, there was a guy in Russia during I think it was like maybe about 3 or 4 years ago. He was, taking out some of his cryptocurrency into cash, and he was just like flaunting it all over the internet and saying, "Hey, look at all this cash I have," and just all this stuff. And yeah, it attracted the wrong attention, right? And so the first thing is, how can you, move with your crypto without, putting up a billboard and saying, "Hey, you know, um,
Rob me.
I'm traveling with this or whatever," right? So the first step is just generally, I would be speaking about it, in those types of places, and you just want to kind of know your surroundings and stuff like that. Um, and then in terms of like how can you protect it, um, usually if you're like protecting your crypto, you have several steps that are required, to actually get access to your crypto. It's not just you're not going to be just holding it on a wallet on your phone where it's just like, hey, if somebody were to take my phone, then all of a sudden they have access to all my crypto. That's a kind of a central point of failure that we don't recommend. So if you layer the security on your crypto, even for you to get access to your crypto might actually become difficult. And so if that is the case, then yeah, if anybody is trying to do that, then it's like I literally can't even give it to you because it would take me quite a long time to get access to it. So the more protection that you have on the technical security side, as well as on the human side, is what can try to prevent that. But
Yeah.
at the end of the day, if somebody puts a gun to your head and locks you up in a room for a week or whatever, with any asset, it's kind of hard to protect against that if you put yourself in that situation.
Right.
You
You
need
just tell them
some
shoot.
Bitcoin
Just
insurance.
yeah, you just tell them just shoot me now. I don't know the passwords.
Yeah,
I
you're done
forgot.
with.
No, but there's something called multi-sig, which is, I mean, even some of this is like another level of like people don't know to go this crazy, but they can go multi-sig, which is it's multi-signature, which means like as an example, like in order for me to unlock like my major bank vault of crypto, I would need my brother, my mother, and myself both to like allow it or something like that. There's like this, like they all hold like a fraction, like As an example, like I could have 4 people hold the keys and 3 of them need to use it, or all 4. There's something like that.
It's like a
And you can make
nuclear
that,
submarine or the 12
yeah, like a key, yeah,
trophies.
like even Vitalik Buterin, the guy who created Ethereum, which is like the second largest cryptocurrency, he needs his mom to help him get his money.
What if she
You know,
dies?
yeah, yeah. I mean, it's your mom. If there's one woman you trust, it's your mother. Hopefully, you know what I mean. Obviously, I know family. Not everyone gets the best, deck of hand. Like they don't get the best hand in the card of deck, right, and stuff when it comes to family. But some people, they really do have loving parents and really good people, and other people don't. So you don't do that if they don't. If they aren't, use your best judgment. But never use your girlfriend. Never use your wife. Fuck that. Nope.
I
Zero
think that
percent chance of that.
there was a story of that of a famous soccer player recently. He was getting a divorce or whatever, and his wife was trying to take
Oh,
all of his net worth or whatever, but he had put all of his trusts and everything under his mother's name or something like that, and yeah, they couldn't even access it at all. So you could do stuff like that with crypto as well.
that shit was gold, man. That shit was so gold, dude. There's another one too.
Is that
Who's that?
Hakimi? I'm just Googling it.
Yeah, yeah, yeah.
Yeah,
Moroccan
probably.
guy.
Yeah, Moroccan dude. Yeah, there's him, and then there's this I forgot this coach for I forgot what team. He got a divorce. The team waited until his divorce was finalized to then pay him
Oh
out like
yeah.
$100 million, $150 million contract
I
for a
heard
wife
about
piece of
that
shit.
one.
Yeah, yeah. So there's ways to finagle the system, but fuck that, but yeah, I mean, but regardless of that, you got to protect yourself. You got to, and then two, it's not about flaunting money. It's not a thing as much as like wearing a Rolex. No, it's about like you're online just like with stacks of cash. I mean, people are stupid. Like, people don't know what things are. You could be wearing $100,000 watch, and people don't even know what $100,000 watch is. Or you be wearing like, but people understand if you're holding like if I got stacks of hundreds everywhere, I'm flying around with duffel bags and stuff like Money Mayweather and stuff. I mean, that's why Money Mayweather has hella. He's one of the best fighters on the planet, but he has unbelievably large amount of security and is moving around in details and stuff like that. So, you have to be careful.
And he's a small man too, so it just makes him
Yeah.
look like a midget. I have seen videos out there. It's pretty crazy. You got to get to the final boss to beat up this guy. Fucking crazy. Yeah, that's some fucking wild shit actually. What can guys do to come out of crypto as a winner and not a loser? How can guys make a profit? So in my kind of black and white understanding, effectively, depending on what game you're playing, it's like if you go into a casino and you're playing against other players, um,
Right.
vaguely speaking, this is black and white thinking. Half the guys are winners, half the guys are losers if they're playing each other. And the stock market can kind of be similar. It's not that simplified though, and really simplifying it.
Right. Right.
But there are as many winners there are many losers, and most definitely more losers than winners. So, what are some ways guys can protect themselves from not turning into a loser and coming out as a winner?
One really simple way is to balance your portfolio on coins that you know will succeed long term versus riskier stuff that might have more gains in the short term. So, for example, we recommend people have 50% of their portfolio either in Bitcoin and or Ethereum. Ethereum tends to do better and it's just as stable in terms of it's not going away. So yeah, if you have 50% of your portfolio in Ethereum, you'll still get the gains there, but at the same time, it's not going away. So you can hold that for 5, 10, 15 years, whatever you want. You don't have to, you can use it as your long-term savings account. If you want to, of course, maximize it and swing trade it over the tops and bottoms of 4-year cycles, then that works too. But that way you have kind of like a rudder in your portfolio to keep the ship stable among the other volatility that's going on. So then when you have the lower cap coins that can do more X's. If those go to zero in your portfolio, well, you still have that 50% of your portfolio that's still in profit. You're way beyond your initial buy-in price anyways on that. So you're good. But most likely, if you have been buying quality projects, and in our course, we describe how to identify what is the difference between a quality project and a piece of crap. And 95% of the market in terms of the altcoins is terrible, right? They're just not well built. So if you focus on quality there, then it's unlikely that you'll have many of those really negative situations in your portfolio. So then when those lower cap coins, in addition to your Ethereum, when those outpace the Ethereum even, then that's what really gives you kind of those crazy gains in your portfolio overall. And what we've found is people who follow our information over the last cycle, on average, will get anywhere between a 20 to 40x throughout the cycle on their original capital. And so, yeah, that kind of diversification within the same industry is a way to, I mean, you're essentially just managing your risk there. So that's one example of something you can do to kind of ensure you're going to win and then still be able to take risk and win even more.
Yeah. I'd say the number one thing is you got to make sure and follow Ice White. This is the most important thing you can do to protect your future. No, but no, definitely. But I there's like a famous thing, the impatience money will flow into the patient's money, right? It's that. So a lot of stock market, a lot of investing is just really just, picking good assets and waiting out the storm. Prices could go down, but if you're in the right assets like Bitcoin, Ethereum, after this cycle, there's something we're saying we're going to finally see a couple of new assets join that rank of assets that they're going to be here for the long term. But we have to wait until this next 4 years to see which ones are going to be it. But because right now we have two blue chips, right? And that's Bitcoin and Ethereum. There is no other blue chips. There just isn't. It isn't XRP. It isn't any of this other stuff. It's those two alone. After, sometime in, I would say 27, 28, we're going to finally know there's an additional 4 or 3 more. And that's, it's going to be very interesting at that point, but yeah, it's just buying assets and winning. But at the same time too, it's also, here's a big one, is people get very greedy. In crypto, you can make a lot of returns, but I've seen guys fumble bags so badly. Imagine you're up $6-7 million and Miguel, it's going to 13, bro. I've had these conversations. I've really had these conversations with people who are like, Miguel, I know I'm up 6 million right now, but I think it's going to 13. I'm not gonna cash out at 13. And then by the time they turn backwards, they're down 4 or 5 million. And they're like, what, dude, that's your own fault. And this has happened at all levels, The thing is once you're up, like still in so early right now, you buy right now, a year and a quarter from now, you can sell 30% of the whole portfolio off, recoup all your money you put into crypto and then some. And then as time goes on, just keep slowly backing up. And it's because people, what they want to do is they want to sell the tippy top every single time. Like, sure, we all can get, like, I've gotten lucky. Charlie's gotten lucky. You get lucky with a couple coins and you sell like almost at the top. Heck yeah. But that's impossible with the whole portfolio, because what happens is when cryptos crash, it's more of mathematical. There is roughly a way to figure out how low a coin can go, and you can buy the bottoms. This is why we bought Bitcoin at the all-time low. We bought Ethereum at the all-time low. And this is multiple cycles, by the way. This is both the 21 cycle and the current cycle. We bought Bitcoin at $3,300. We bought Ethereum. I remember buying Ethereum at $78. It crashed from $1,400 down to $78 and then went up to $4,800, crashed now to $800. I bought it at $800. And we bought Bitcoin at 15,500. We bought Solana at the all-time lows. We bought Phantom at the all-time lows, AVAX, just any coin you can imagine. We basically bought the best prices ever on these coins. And this is not the first cycle we've done that. Now, what happens is during a bull run, there's an extra element that gets added to bull runs, which is how do I say it? Well, I'll just say it. Kind of like basic, like mental retardation. Basically, is what ends up happening. Human nature ends up entering the equation, right? So it's very easy in despair. It's really easy to tell, like at certain points where it's just things are oversold. But the thing is people think things can keep running forever, and so you can get higher prices than you think you can that are possible, and so it's a little harder to calculate. Like there's a quote they use, like, I can be retarded longer than you can be solvent. in the space, right? So you think like people were in the previous cycles were like Bitcoin's never going to go past $20,000, and then it goes to almost 70,000, right? But here's the thing: everybody thought it was going to 100,000 plus. So there's people who had all these profits, had bought it at $3,000, didn't squirrel anything away after a 20x plus on Bitcoin of all things, this time around 15,000. Like, what if we go to 150,000 plus? That's 10 times on your money. Like, at some point you gotta just, it's gonna hurt and it's gonna suck, but you gotta put, at some time you gotta protect whatever you put into the market. That's one thing is like, for a lot of our students have been with us here for over a year plus now. During the bottom, we're gonna ring the bell because we can tell by our own portfolios, because we bought during these times. Hey, I could sell 10% of the portfolio off right now and get all the money I put into crypto. Smart idea. Let's start doing that. And we're obviously adjusting information based on, we're always gonna get information for guys who are jumping in today, but we're also taking care of our previous clientele who've been here the entire time as well, because it's going to be two different sort of mindsets and stuff. And then sometimes we have to give the medicine to the guys coming in, like, hey, sorry, you got to sell like 40% off now, just in case, because you'll thank us later. But at the end of the day, it's kind of like you choose. Like, there's something we say, it's like either you push the green, at the end of the day, you push the red button, you push the green button. It's your decision. I mean, this is just advice. I mean, you don't have to listen.
Yeah. Is it difficult making content on cryptocurrency or finance in general? Do you find that YouTube puts limits on content like this?
In terms of gaining virality and growing an audience quickly, I would say in that regard, sometimes yes. So YouTube, the kind of limits that they put on it. One thing that they did was they changed a policy, I think like 2 years ago. And during that change in policy, it was to separate, what kind of content was viewable for children and stuff like that. And when they placed that into the algorithm, they accidentally, right, banned like three of the top crypto channels that had hundreds of thousands, if not millions, of subscribers to them. And those channels were gone for like a week. And everybody in crypto was like complaining to YouTube, like, what the hell are you doing? And stuff like this. And then, of course, from social pressure, YouTube was like, oh, sorry, we didn't mean to do that. That was a mistake. Oh, sure it was, right? And so, but for like the normal channel, like, coming up and stuff like we've been, they essentially do like a little bit of shadow banning, right? And that's like 3 out of 4 years. The 1 year that crypto is like extremely hot, going to new all-time highs, and things are absolutely batshit insane. During those periods of times, what YouTube does is they do incentivize crypto. So that is where a lot of crypto YouTube channels grow a lot, because all of a sudden it's popular again, and okay, now it's okay to talk about it. So during what a lot of crypto YouTube channels tend to do because of that is they leave the market for 2.5 years out of the 4 year cycle. They don't give their audience proper information. They only come back when it's hot. And so they tend to get people trapped in the bad part of the market, because they're all going for the short-term gains. Whereas what we've taken the opposite approach. We'll go the slow but steady and organic route, meaning we'll grow our users through bear markets as well as bull markets. So when the market gets really hot, of course, we're still here. We're streaming. We're doing everything for content, and so that's where our channels grow the most. But during the bear market, when nobody's paying attention and YouTube's like, hey, this content's not the best, so we're not going to notify some of your subscribers, or we're actually going to unsubscribe a couple people from you, and stuff like that. During those times, you just have to keep going, in my opinion. And that's where we grow some of our best audience, because that's where the value investors are coming into the market. And right now, we're still at the early stage of this bull market, meaning a lot of people haven't yet realized that crypto's back. And a lot of people still think crypto's a scam and all this stuff. And so right now, the people who are still coming in, subscribing to our YouTube channels, and taking our courses, stuff like that, tend to be, I would say, the more intelligent people in the market, because they see, oh shit, here's something that's still a bit undervalued. I can see where it's going. Okay, I'm gonna jump on this a little early. So yeah, even though YouTube does kind of slow down the content, you can still do well by kind of pushing through that, in my opinion.
Is it also hard for you to get testimonials because I feel like there's a kind of bias toward people who are really obsessive about crypto but want to remain anonymous?
Yeah, I would say when people make a lot of money, they tend to be very excited about it. And so there's some people that even though they would maybe prefer to be anonymous, sometimes they're so excited they're like, I gotta tell the world, like Charlie and Miguel have made me so much money. And you know, whenever we go into like a live stream on different YouTube channels, our audience follows us and lets people know, hey, I've made double my money in the last 6 months with these guys, or I've done this, I've done that. And so sometimes that's behind, you know, an avatar or a character name on Twitter or on YouTube, and so that gives them a little bit of a barrier of anonymity. But no, we have a lot of people who are like, no, if you want me to do like a video testimonial, we'll be happy to do so for you guys because you've changed my life so much. So the value we bring it is kind of oversized compared to how much you know we charge for the information that we give.
You probably talked about this a little bit throughout the video so far. Could you explain a bit more about Bitcoin halving and how consistent and predictable is that?
Sure.
Pretty consistent. I mean, you want to do it, Charlie? You guys-
Oh, I mean, we could talk about it either way. I don't. It doesn't really matter to me.
Okay.
Go for it. Go
Yeah,
for it. Go for the start of it. I'll add on to it.
yeah, it's pretty. I mean, I'd say it's extremely predictable. It's exactly every 4 years. The date can change a couple months here, or a couple months back. Just it's all depending on how fast they're kind of processing transactions in the blocks. But we're roughly going to get it sometime in April, like mid to late April, in terms of this year. It happens every 4 years, and it's pretty mathematical. It's basically the inflation gets cut in half every 4 years. Eventually, I think sometime in 2156, I think all the Bitcoin's out. But just to put it into perspective, when Bitcoin first launched, Bitcoin was inflating. So the first ever block on Bitcoin created 50 Bitcoin. And that 50 Bitcoin, it creates 50 Bitcoin every 10 minutes. And then for 4 years. So every 10 minutes for 4 years, it created 50 Bitcoin. And then you had the first halving ever. And then when that happened, it went to 25. 4 years later, it went to 12.5. Then after that, 6.25. And then it just continues onward. So where we're at right now is Bitcoin has released about 19 million Bitcoins into existence. And we are only going to have a grand total of 21 million. So almost the entire supply is basically out now. So the inflation that's happening right now with Bitcoin is very small. Like we're talking like after the halving, I think it might be sub 1% or 1% inflation. So it's very small, but still very valuable because the Bitcoins have keep increasing in price. So I mean, it's still profitable for people to mine it, but it's just grown to a scale of like, we get this question all the time, which can I mine Bitcoin? Is there a way to set up a Bitcoin miner? It's like, it's not economically feasible for most people. It's just not. It's grown to like an industry of scale. Like, I mean, we know people who installed like Bitcoin miners near volcanic, near like thermal energy and stuff where they're able to like get electricity for free. The only way Bitcoin mining is profitable for normal guys are stealing electricity because there's an electrical cost. So if you're stealing electricity, you can get free electricity. It's very valuable. Sure, you can make a lot of money on it, but if you're not having like low to like free energy cost, you can get in some big trouble. And it's also a job as well. You have to maintain these things. They get very, very, very hot. This is why they're usually mined in cold countries where like they can save on cooling costs. But yeah, these things will melt if the cooling had turns
Yeah.
off. I mean, they literally would melt. It would melt and explode and turn on and light on fire. That's how fast they're processing transactions.
Yeah,
Yeah,
so
and it's
I used to work at Google. So at Google, for example, there are some data centers in Finland in like the middle of the fucking snow. So that's great. And there are some, I think, or at least this is from memory, some in the Netherlands, and they could like open the windows or something because of the wind. I don't know. I never visited those places, but that's some of the stuff I remember or that people told me. So yeah, that's pretty crazy. But I did see years ago some Bitcoin enthusiast went to Germany or something, and there was like a nuclear power plant, and they were using that to mine Bitcoin. I was like, what the fuck? But aside from that, I don't really understand much about Bitcoin mining anyway.
Yeah, all mining does is it secures, excuse me. The only thing it does is it secures the network. And so in order to process transactions, I have to run the entire blockchain. And so it's a way to decentralize it, right? So if I run a computer and I'm like running the blockchain, okay, boom, I can do that. But then I'm trying to solve this algorithm every 10 minutes by just having my computer randomly guess at it. And then if I can, it's kind of like a Rubik's Cube or a Sudoku puzzle or something. And once my computer figures that out, if I'm the first one to do so in that 10-minute span, I get the reward of that Bitcoin for that 10-minute period. And then there's another 10 minutes and another 10 minutes. So that's right now it's like 6.25 Bitcoin every 10 minutes that gets released to whoever wins that prize essentially. And then after the halving in April, it'll be about 3.125 Bitcoin. Or sorry, 6.25 now, it'll be 3.125 after that. And so, like Miguel said, it's really not that much inflation on the coin anymore because 19 out of the 21 million are already released. So now all these computers, right? The harder it gets in order to kind of solve that puzzle, the more people you have trying to solve it, the bigger computer power you have to use in order to try to solve it. Therefore, you have to create like a whole freaking warehouse of computers in order to be competitive because there's so many big players in that space, and that kind of continues over time. But just in terms of the predictability of that, so that's what you actually have people physically competing with their computers to get those coins, and so that creates those 4-year cycles. So in terms of the predictability of how Bitcoin moves, those 4-year cycles, it might be a coincidence or it might be an intention from the people who created Bitcoin, but it came out right after the 2008 financial crisis on January 3rd, 2009. That's when Bitcoin came out. And the halvings tend to line up with liquidity cycles in the world as well. As money kind of expands and contracts globally, you move along with the halving. So even though the halving has a little bit less impact every 4 years on price, price kind of continues to go up, but kind of stabilizes over time. That slowing down of that basically eventually makes Bitcoin a little bit more stable. But so then when Ethereum is basically one level lower, you have more gains that can be made there. But because, like I said before, Bitcoin's kind of the star or the center of that universe per se. So that knock-on effect of Bitcoin's fundamentals, the halving itself being predictable, kind of shifts over to the other tokens. But just to give you 2 points in the cycle that are really important, one is the low that tends to happen about what do you call it, a year, 2 year and a half before the halving. And so the one we had in the end of 2022 was exactly 3 years and 11 months after the previous low that we had. So we had November of 2022, and then the one we had before that, in terms of the low, was December of 2018, and then we had one 4 years before that. And so the predictability of that, because it follows liquidity cycles, is actually pretty damn good. And so we would expect the next low in the market to be about maybe end of 2026, something like that. And then in terms of the highs, we had the last high in November of 2021. The one before that was December of 2017. So the next one most likely will be around October of 2025. Of course, there's some windows within there. I would say, depending on how Wall Street affects the market this time around, we probably get that high between anywhere in March of 2025 to October of 2025. But yeah, you can kind of follow these cycles and the fundamentals drive that.
Yeah, and that was a really important thing. Is like most of these crypto guys, they will not tell you that at all. They want,
Yeah.
yeah, they won't tell you that. I mean, there's a lot of people who would like the whole game is like try to get as many people into the space in 25 so you can use them as exit liquidity. You know what I mean? Yeah, not great.
Alrighty, final question here. You guys have done collaborations with Fresh and Fit, Roll Tomasi, and even Robert Kiyosaki. I read his book just a few weeks ago. How did you get to this point? How did you manage to network with such guys and get to where you are now?
Yeah, so when we started in the early days, me and Miguel, we have multiple interests, right? So we're interested in the red pill, we're interested in crypto, and when I started the YouTube channel in 2019, um, basically the red pill space was an area that we had connections with, and so we started streaming with the people in the red pill. A lot of streamers that just are talking about it on a daily basis, and we said, hey, this actually crypto actually fits very well within the kind of ideology of red pill with seeking truth and then also being self sovereign and responsible for your own outcomes and stuff like this. And so we just, it was like kind of a grassroots thing. We would explain it to people, and then, people would be like, they're not a little curious, but it's not that, what do you call it? It's still risky to them and stuff like that. But then once we started to basically show people and our audiences that we were giving them success, then it started to compound from there. And when you give success to one person, they tend to tell another, and then another, and another, and yeah, then we eventually got the attention of everybody in the red pill, and we started making a lot of people a lot of money, and yeah, it just kind of trickle up in that way. But we started the crypto mindset course in September of 2020, and yeah, we've never looked back.
Yeah. And also this whole thing too, like there's people who like, all right, like let's just say I was like trying to be evil here. How can I infiltrate and make all these people follow me and doing all this thing, right? People, it isn't like we went into the red, like, we're crypto guys. We're going to go into the red pill and then we're going to have all the red pillars. Or we're like, well, I'm a red pill guy and I'm going to influence I'm going to get into crypto and get all the red pill into crypto. No, it was a natural thing. We were already guys in the red pill because we wanted to be in the red pill before there was anything there. It was just, out of like, most people in the red pill come for the red pill because of breakup or pain, divorce, rape. I mean, it's something, can't get a girlfriend, virgin. It's like I have too many women. How do I manage these hoes? It's a rainbow. It's a rainbow of things, right? But me and Charlie I mean, I've always been an investor. So is Charlie. And, I started in stocks and eventually went to crypto, and I was a red pill guy. So it was kind of this, like what I'd recommend for a lot of people is like what are your actual interests and try to find ways to fuse that together and find a community. But it's the sort of thing where like you already have to be very naturally interested into it already, because I mean, got people will do crypto or people will do red pill for a grift. Like when red pill's hot, everyone's talking about these red pill and these sexual dynamics. When it's not hot, they jump over to, we're talking about politics now. Or on the crypto side, oh, crypto's hot, someone talk about crypto, and then now it's not hot, now I'm jumping into the next trend. And the thing about us is that we never swayed from the truth. We've been crypto guys in the red pill and we've stayed crypto guys in the red pill, period. And then and it's consistency on top of that too. I mean, look at our competition. What competition? They all died. They all left. Like, anyone that was teaching crypto was like, they did one webinar, barely half woken up, probably after done a bender of coke and stuff, taught whatever the bullshit they were teaching, and the rest of it was pre-recorded dog shit from like 2020, from 2017, or leftover from 21. That's it. Like, I'm so confident in saying that it's the fucking truth, dude.
No, no,
Like,
I could actually attest to that. Actually, not that wasn't what I was doing, but I did see very similar things. So that's pretty funny,
yeah,
actually.
because you could tell, like, I mean, people who are like, I mean, they're depressed about doing their, like, they're not passionate about it. You could tell, like, and then there's some people who start with passion, and that's different too. You could start passionate about something, and then you can get sort of like, you get a little like, I don't know how to say it. Like, I guess you get a little over it at some point, right? But you can tell people who are passionate, are still in it today and stuff, and are trying to do it now. It doesn't mean you don't take a break here and there, but I think that's the big thing, is that people can tell like you're real about it. And I think that really has a lot of staying power. And then that's why people were willing to trust you. And on top of that too, one thing that's kept me and Charlie out of trouble is that we're not over here like trying to launch an NFT scam or a fucking or launching some sort of crypto coin. We're educating and we're investing our own money into the space and stuff and teaching people how to invest. We're not over here like getting paid by a coin to go shill this coin to all your followers or all this random crap. That's where people get in trouble.
We've had companies come up to us and say, "Hey, if you tell people about our exchange for the next 1 month, we'll give you $30,000 in stable coins. Here you go." Right. And we've said, no, fuck that, because your exchange is actually possibly detrimental to my customers. You might get them to use leverage trading and stuff like this. So no, we don't trust that. Whereas, like you were saying before, some crypto YouTube channels get a little shadow banned and stuff like that. And so some of these guys, because they want to go towards the quick money, they'll go towards those kind of sponsorships that are actually risky for their customer base. And so we've never done that. And we instead, created our own services and products so that we can provide value to others. And we can align it in a way that if we make you guys more money than what the course costs, then you guys will be happy, and then you guys will be more likely to educate others with that information, or recommend others to our educational services. So incentives are pretty important to us. So we like to add more value than we take.
Alrighty, nice. Where can guys interested find this course?
So I think you have the link in the description. Is that correct?
Yeah, I'm gonna put it in the pinned comment and the description.
Okay. Yep. So
You can use a link, at Cultivate Crypto at Ice White, or actually it's going to be at Ice Coin. The thing it'll be in the description box below and stuff like that, but definitely use the guy's link here and stuff like that, and then you'll get a nice discount. Yeah, they can get a discount if they pay in crypto, right, Charlie?
yeah. So if you press the link, you'll be directed to the site, and then in the URL it should say Icecoin, and also on the main part there, so that that we know that you guys came from this show. That's how you found us. And then once you click that link, you'll see the price. And if you want to pay the normal way, you can pay by credit card, you can pay by debit card, you can pay by PayPal, Google Pay, Apple Pay, however you want. But yeah, if you wanted to pay by crypto, all you need to do is send us an email to charlie@cultivatecrypto.com. The email is at the top of that website as well. So click the description or click the link in the description for that. And if you send us an email that says in the subject line, Ice White pay in crypto for course or something like this, then in the description, just say, hey, I'd like to pay, or sorry, in the body of the email, just write, hey, I'd like to pay by crypto. Here's some information. I came from the Ice White channel. Then boom, we'll give you the 15% off, which is I think $848.30 instead of the regular $998 one-time fee for the course. But no matter how you pay for it, once you do pay for the course, within 24 hours, you'll get an email from either charlie@cultivatecrypto.com or support@cultivatecrypto.com. If you don't see the email, look in your spam or filter folders. And basically, once you press that email, you'll get a couple links here for Telegram channels. One will be to a main chat where you essentially get to discuss with everybody what's happening. There's already over 450 people in that chat who are all discussing it and giving each other different types of information, having a good time while they're at it. And then there's another channel, which is a links channel on Telegram. And that's where all the Zoom and Vimeo links and everything for the recordings and live webinars will be. And then once you're in there, great. We have about 5 pre-recorded webinars that you'll have access to throughout this next 1 week. And then we begin the webinars on February 9th at 10 p.m. Eastern Standard Time. And there'll be a schedule within the links channel. But essentially, we're going from February 9th to February 23rd, 2 days on, 2 days off. And the days that we are on, the webinars are at 10 a.m. and 10 p.m. Eastern Standard Time every single day, on those days. And then if you ever miss a webinar or you're working or something like that, then they are all pre-recorded, and within 8 to 16 hours after each webinar, you'll be able to access the recording, and that's good for review as well. So during the off days, we ask you guys, hey, review the information, then we come back from that break and have a lot of Q&A. So that's essentially how it works. And then that's 20 webinars in total, 15 live, 5 pre-recorded. And then we have these things called flash webinars throughout the quarter as well, to basically, if there's any kind of emergency in crypto or anything new in crypto that we want you guys to know about, we'll let you guys know a day or two in advance. And hey, let's jump on a flash webinar and give a little extra information. So we usually do anywhere between 20 to 25 webinars a quarter for everybody who jumps in here.
Nice. Alrighty, guys. Thanks for joining. And if you're interested in that, you can find the link in the pinned comment and the description. Thanks for joining me, guys.
Yeah, appreciate it. Thanks for having us on.